I want to bring in Brian Levitt now, Invesco Global Market Strategist, to continue this market conversation. So Brian, today, the last trading day of the quarter, last trading day of the first half of the year. And we've seen all three majors up over 10%, at least for the first half of the year. What are you anticipating for the second half of the year? Do you think that that strength is going to continue or perhaps even accelerate?
I do think the strength is going to continue. I mean, what we've seen so far is very indicative of an economy moving from what has been a recovery phase of the cycle where you favored more of the cyclicals, value-oriented parts of the market into an expansion phase of the cycle. And the expansion phase, you start to see more participation from things like technology and higher quality stocks. And that's precisely what has transpired. So this has been very true to form. Could there be more volatility in the next 6 months than we saw? Yeah, perhaps. Maybe concerns about inflation, maybe concerns about Fed tightening. But the reality is we're still early in this cycle. The economy's expanding. The bond market's signaling that inflation is going to moderate in the years ahead. That's a good backdrop for risk assets.
What about the backdrop, Brian, for IPOs right now? I mean, it looks as though investors are very optimistic. They're feeling good about jumping in at the ground level for a number of these companies, albeit a number of them are unicorns like Didi, for instance. But what do you think that's telling us about investor psyche? And do you believe the IPO market will continue to be a strong one in the second half of the year?
Yeah, so it's telling us that there's a lot of money out there. Investors are looking for a place to allocate that money. In addition, volatility has been quite low and borrowing costs are quite low. So it's a very conducive environment for investors to invest in public offerings. I suspect it'll continue to be strong. It's not as if I believe that we're going to be entering an environment anytime soon where sentiment's going to be deteriorated significantly or huge spikes in volatility. We know there's a lot of money sitting on the sidelines, and so I suspect it'll continue to find its way into these parts of the market. Big thing to consider, though, a lot of the moves in the IPOs have been in the first day, which tends to benefit more of the institutional investors than the American households.
You know, Brian, we haven't really asked this from our strategists in a really long time. But now that we see this Delta variant and the Delta plus mutation starting to spread, we're hearing about the potential reintroduction of those mask mandates, even if you are vaccinated indoors. Curious to know how much you think right now that the virus, especially this Delta variant, could prove to be a headwind to markets.
Well, I would consider it a tail risk to the economy, less of a tail risk in the United States and Europe than perhaps other parts of the world. U.S. and Europe, vaccine rates are quite high and seems to provide good protection against the Delta variant. I don't necessarily think that that's a huge headwind to the market. We've seen that the market has performed well. Even when we saw the coronavirus raging, what ended up happening was leadership looked different. And so to the extent that a new variant slows this economy down, takes us to a new lower level of growth, then market leadership is going to shift again. And we're already starting to see some signs of that to the growthier parts of the market, as Jared had mentioned, tech being the best performer this month. And so I wouldn't say that a Delta variant kills this cycle. That's not, in my opinion, the event that's going to be the end of what is an early cycle. But it could slow this economy down some and adjust leadership, again, to the more structural growth businesses away from those parts of the market that need really robust economic activity to perform well.
It's hard to believe that we're halfway through 2021, Brian. I don't know about you, but it is truly whizzing by. And now as we look to the second half of the year, do you see a change in leadership? I mean, we saw investors jump back in with both feet into tech, especially the month of June, the NASDAQ outperforming the rest of the market. Do you think that's going to continue and the reflation trade is sort of over right now?
I'm not sure that the reflation trade is over. The big recovery stage of the cycle is over, and that's when the elements of the reflation trade really play out to the biggest magnitude. Now, as you move from recovery to expansion, it makes sense to see a broadening of that. So it's not just the value and size parts of the market. You also get quality and growth. What the market is going to start to assess, though, as we move further towards 2022, is a prospect of a slowdown. And we're not going to grow at these rates on a sustained basis. We're not going to see inflationary pressures at these levels on a sustained basis. And so as things start to moderate, as you start to assess economy that's moving into a slowdown, it sounds ominous. It's not. It's just coming down from a very robust level. In that slowdown, then the transition starts to move more from the reflation trade to the quality and growth trade. And hey, I believe that'll play out over the next year. And so I've been telling people that reflation trade is a trade. Don't sell all your tech stocks. Don't sell your structurally advantaged businesses. It's a trade, probably has some legs, but the slowdown will be upon us as we proceed through 2022.
All right, Brian Levitt, Invesco Global Market Strategist, thanks so much for joining us as always.